Okay, I'm Mike Ong from Phillip Security. Today we'll be talking about short selling opportunity with CFD during COVID-19. So before we begin our webinar, right? I'm in charge of these two Telegram group where we always there's the first channel, there's an announcement channel where we'll share education article, seminar, and workshop invitation over here, so you can join. Or the second channel will be the SG trading group. So we always be discussing trading idea, investment idea inside the this Telegram group where you can feel free to do discussion. So you can take down of this link and you can join it later on. Okay, next I'll move on to the next slide. So what will we be discussing today? First of all, first one will be covering about market outlook. Second, we'll be talking about what is short selling, then what are CFD and their advantages, and what is about FX CFD, that's our new launch product. So before we actually do investment or trading, right, we need to take note what are the key events that will be happening in 2020. So since the start of the year, we have know about COVID-19 that has been affecting us. So you can see that in April, there will be a South Korea election is happening now. Another key event that we'll be looking out for will be FOMC meeting. Will happen in April, June, July, September, November, and December. The next key important event we'll be looking out for is actually the UK election in May. And the most important, I think, that will be affecting most of us will be actually the US president election in November. But even before the president US election, right, you know that they'll be doing a lot of debates around, like all this, they'll be sharing about their policy, all this that can affect our global economy also. Then another key event that we'll have to keep a lookout for will be US-China trade war tension. So actually the US-China trade war tension is not over yet. You can see that US is still targeting some of these, like for example, China telco to enter into operate in US market. So you can see actually the US trade war tension has only hasn't ended yet. It's only slowed down a bit due to this COVID virus. And also we need to think note about this either missed tension where there's oil crisis that is happening now. So next we'll be talking about COVID-19 update. You can see that actually this is the chart that I got updated on the 13th April 2020. So you can see that how many cases is confirmed, how many people recover, and what is the death rate. You can see actually the confirmation case is also increasing at an exponential rate. So actually COVID virus is quite a black swan event. Actually, is what is happening is actually our expectation. And I think that the impact of this COVID virus 19 might be higher and greater than 2008 economic cycle. Because during 2008 economic cycle, right, you can still go out as normal, you still can go shopping center, you still can eat as normal, you still can travel. But the impact of this COVID-19, right, we all has to be trapped at home. You can't go out. You only can depend on Grab food and certain services. So you can see that actually even with tourism, all this, right, a lot industry are really impacted by this COVID-19. So it's unlike the previous economic crisis recession. Next thing, what we'll be looking out for will be the global PMI and the GDP. So actually global PMI, this one is updated recently, has actually fallen by a record amount for the second month, and it's the lowest since February 2009. So you can see there's a sharp drop over here. Even the service sector downturn is also the fiercest in 22 years. And also global job cut is the highest in mid-2009. So you can see actually we are still in dropping at a very fast rate. And also price is slashed at a faster rate since 2009. Although China downturn has eased, but acceleration for the decline will be seen in the US, Japan, and Eurozone, and also UK. You can see that actually in this country, right, the COVID-19 is still increasing, haven't really slowed down that much yet. So it's something that we have to keep a lookout for. And also in Southeast Asia, especially in those less developing country like Southeast Asia, also maybe South Africa, right, we have to think note whether this COVID-19 is actually escalating or not, because there might not be sufficient test kit in this country to test out all these virus case. So you can see that overall the global economy has been slowed down quite significantly over the past few months. So this one is sharing about past recession cycle. It share all this detail. Market bottom out before the market always bottom out before the recession officially end. So you can tell you that when the recession start, what is the length of this recession, when is the market bottom, and you can see that market actually bottom before or after the recession end. So this is all the past data. So you can see that April, March recession start April. So how long can this, like on average, the recession is around 10 to, you can see the average is around 11 months. Then actually the market tend to bottom up around 5 months before the recession end. So you can see that actually this is the average. So you might you can take a guideline from here. So I get this report from this LMP research. Okay, next I move on to the next. So another thing is that some of us will be looking at index for any sign of direction. So I have gotten these charts for the S&P 500 weekly charts since 2000. So you can see during the 2000, actually S&P dropped almost by 50%. Then also in 2008 recession, economic crisis, right? They also dropped by around 57%. But based on our current situation, it dropped only around 35%. Also, another thing is that this one is actually, the orange line is actually the 200 moving average. So what we see that actually during the bull run since 2010, right, you can see that actually this one 200 moving average has been a strong supporting line where every time it come to here, right, there's a rebound. But subsequently in last month, actually they break down from this to the 200 moving average, and they have a bounce back. So it's something, what we see is that you see in the previous economic crisis, right, actually this they have a drop actually below the 200 moving average before they have a dead cat rebound, and before they subsequently go down. So many people will be asking whether is this a dead cat rebound. So if we'll have to keep a lookout for this 200 moving average. If this 200 moving, this price level, they break down to a 200 moving average, right, they will expect the price to continue, actually have a dead cat rebound and continue to escape. So what we will keep a lookout for is actually the 200 moving average that we have to take note of this. So I'll move on to the next slide. So another thing is that when we are doing investing or we are doing trading, right, we need to take note of business cycle, because what we talk about business cycle can be actually grouped into 4 different phases: early stage, mid stage, late stage, and the recession phase. So actually this one is taken from the Fidel South sector investing using business cycle. So I take from them. So you can see that what is happening around the world. China actually has entered the recession, Italy and Germany. Then for the rest of the country, actually going towards the recession or entering the recession phase already. So it's very important when you're doing trading or investing, right, you need to know what is happening around the world, because each country also perform differently depending on this business cycle. So you need to know what is happening. So in the recession phase, right, you can see that actually there's a lot of falling activity as we talk about PMI, global PMI index. Also, credit profit will be declined. Then now there's a lot of policy easing where by the Fed, by the different government, where they go towards zero or negative interest rate, and also inject liquidity into the market itself. So different sector will actually perform differently across different business cycle. But do take note that the past cycle might not be representative of current cycle, because each recession, right, what is the root cause of this recession might be different. Like for example, for the 2000, right, it's actually the technology bubble. In the 2008, it's actually due to the poverty mortgage loan and the banking. Then in this cycle, it's actually due to the COVID virus that slowed down the global activities around the world. So you can see actually at different stage of this cycle, right, different sector will perform differently. So one of the sector actually will perform well in during this stage will be actually the consumer good, because we still need to go on with our life, to go on as normal, we need to eat and also do things. Then healthcare is also another thing that we'll expect to do well, especially in the recession phase, especially with this COVID virus, because we will need a healthcare hospital, and also they will need to have people to take care of this COVID patient. Another thing will be actually utility. Then sector that will not do well will be this real estate, then technology. But for technology wise, right, technology might be subjective in this stage. Like for example, if some technology might benefit from this COVID virus, but while some technology might not, because it's imagine like we are now actually working from home. So working from home, right, you can see that what we will need is actually some of this service like by Zoom or by different service provider. So you can see that actually all these do affect our do sector performance across business cycle might not be the same. Okay, so let's talk about what is short selling. So first of all, so let's say if you buy DBS at 22.8, so then subsequently you can see actually here if the classical triple bottom, if you are looking at this chart, is a weekly chart. So if the stock rise, subsequently you can see the stock go up with the price to go up. Then you see actually there's a spinning top. Spinning top is actually a bearish indicate candlestick. So subsequently you just take your profit at around 27.55. So what you're getting be profit. Let's say you bought this 1K of shares. So you buy 27.55 and take you buy 22.8 and so you take your final minus initial multiply by the quantity, then you can get the 4,750. You ignore this zero. There's a mistake here. However, sometimes when we are doing trading, right, actually we want to actually short sell the shares because we see that this spinning top is actually a bearish bearish indication. So instead of buying, right, we want to do short selling. So what we will do at this stage, so we sell at 27.55. Subsequently, you can see that actually the stock start to drop, and when we see that at this price, right, there's a potential reversal. So what we'll be doing here, we'll take our profit, buy back at around $25. So from this, right, you can get a downside return of this 2,500. You take the final minus initial multiply by the quantity, then you get this side. So we need to understand what is short selling process. So let's say you are a trader. So before you do short selling, you actually need to borrow the underlying asset from the broker. You can do it through our PhillipCapital SBL. Then subsequently, you short sell the underlying asset in the market. So when the price starts to drop lower, what you need to do, let's say I come back, the price dropped to $25 in the previous example. So what I need to do is I'll buy back the underlying assets, then I have to return the underlying asset to the broker. So in this process, you have to do 4 different steps on your own. So with short selling through CFD, so as a trader, what you need to do, you just need to focus on short selling the CFD contract. Then this is the CFD contract. Back end, we'll do actually the borrowing of your underlying assets and returning of underlying asset on your behalf. So you only need to focus on those steps. When you short sell CFD contract, also when to buy back your CFD contracts. So this one is actually making it easier for traders who want to short sell the market. So it's much simpler as compared to the previous one, where you need to do all these 4 different steps. As compared to this, you need to do 2 different steps. So it's much simpler for people who want to actually do short selling. So another thing is that when we are doing, because we just now talk about sector performance across different business cycle, so you can see that when you're actually bearish about certain sector or certain stock, right, you can also consider short selling. So I have some example. For example, let's say we are talking about early stage business cycle. So when I'm in early stage business cycle, I will say that based on this, where you can see actually in early stage cycle, real estate will expect to do well. Then what sector will not do well is actually healthcare, energy, and utility. So when we are doing sector investment, right, we can also use CFD to actually do in trading in sector. So what I'll be doing, I'll be overweight on real estate sector, then I'll be actually underweight on utility sector. So what I can do, I can consider long real estate, consider short utility sector. But do think note that past cycle may not be representative of current cycle also. So what I can do, so long real estate, short utility sector. because you can see the analyst report, they will sometimes be overweight on certain sector, underweight. So you can actually make use of this to see also. Then another way is that what we can use CFD for. Let's talk about Asia PhillipCapital Trust. It's actually a business trust that give very high popular dividend in the past. It's very popular because of the dividend yield more than 10%. However, if you are so-called fundamental, when you are looking into this stock, so we'll be looking into this stock. So first thing what I look at is actually net income margin, with income that company can make. And can see that since 2014, the Asia PhillipCapital Trust, right, actually their net interest margin, right, has been dropping. So this one will definitely affect their ability to pay out dividend. So what is next? You can see that actually their dividend, right, payout ratio is more than 100%. So means that Asia PhillipCapital Trust is paying out more than what they are earning. Is it sustainable or not? If they want to maintain this dividend payout ratio, right, means that they have to take on more debts. So means that you can see that their debts actually increase over 100. Total debt to equity actually increase more than 100%. Means that this actually dividend payout is not sustainable in the long run. So actually I wrote the article, HQ article, discussing about this Asia PhillipCapital Trust, and I think in 2018. So we talk about this, whether the Asia PhillipCapital Trust, their dividend payout, is it sustainable? You can see that we sent out articles subsequently, and subsequently a few months later, right, actually to Asia PhillipCapital Trust will actually cut down their dividend payout to implement in the fourth quarter of 2018. So you can see actually subsequent, because the dividend is already, what they are paying out is using their debts to pay out all this dividend. It's not sustainable for the company to grow, because if they keep on doing this, right, then their debt will get even higher and higher. So at certain point, right, they have to cut their dividend payout. So when the dividend payout is being cut, right, people will actually get out of this stock already, because it's no longer attractive. So you can see actually with the dividend payout, there's a sharp drop in the price. So actually you can consider shorting this kind of stock that do not have a strong fundamental, because there's some issue with this company already. So next I'll move on to what are CFD and their advantages. So CFD is actually a derivative product. So actually it's traded OTC. OTC is like, okay, when we talk about OTC, people will get very confusing, because if we are talking about SG, right, it's actually a centralized market. Then if let's say we talk about money exchanger, because we go to different money exchanger, right? So all these are actually traded OTC, because you can see the difference. It's not like a centralized location. Then CFD is actually allow you to participate in the price movement of the asset, whether is it going up or down. So you can consider long or short. One thing is that about CFD, we do not own the underlying asset like normal what you bought shares or ETF. It's actually a contract agreement between you and actually with CFD, with Phillip CFD, will be with Phillip Security. Then what we do is actually the settlement difference between the closing and opening price. So there are many types of CFD. You can do equity CFD, where allow you to trade maybe DBS or Apple shares, or maybe Hong Kong share, Alibaba, Tencent. There's also DMA market, is the direct market access. CFD is only offered for Singapore market, SGX, because for equity, right, CFD, right, let's say talk about Singapore. If you are doing equity CFD, right, you cannot participate in the pre-opening or post-closing of this market. But with DMA, right, you can participate in the pre-opening and post-closing trading hours in the SGX market. Then also allow you to trade on world indices like S&P 500. And also one of the most popular for day trading, especially for Singaporean, right, I would say is actually Hong Kong market, Hang Seng Index, because you can see that actually the timing wise is more suitable for us. And also Hong Kong Hang Seng Index has quite a lot of volatility. They move up and down. So we can look out for this index if you are interested in trading world indices. Then we also offer commodity CFD, like where you can trade in gold, silver. So I think especially gold, right, you can see that with the Fed continue to print out this money, right? Actually, maybe we'll talk about 2008 recession. You can see that actually in the previous recession, right, actually 2009 and 2010, right, actually the Fed do QE, So QE actually is a printing of money to actually support the market. You can see actually with this right in 2011, I think the gold actually spiked up the price of around $1,800, close to that. So you can see that with this current situation, if Fed continue to print out money to support, right, there's a inverse relationship. Gold can actually continue to appreciate in the price level. Then lastly will be our FX CFD product. So if you have any question at any point of time, you just post inside Q&A. Later I'll answer towards the end of the webinar. Then FX CFD allow you to participate in the FX foreign exchange. Later we'll be sharing more about this later on. So what are the short advantages of this CFD? First of all, CFD has a leverage, but do take note, leverage is a double-edged sword. It can amplify your return, but it can also amplify your loss. So you need to handle it carefully. Next will be allow you to short the market. You can do short selling, and subsequent when the share price drop, you can cover back. Then it's also you can use it for hedging. Later we'll share more about this. So always take note, leverage is always a double-edged sword. You need to handle it carefully. So let's do a comparison between stock and CFD. So if you are doing stock, right, you can only go in one direction. So means like, let's say I say, oh, DBS is around $15. So when you go up to $20, I can sell off. So, but with CFD, right, actually you can allow you it's actually buy direction. You can go both long and short. So you can go do long and short, give you more trading opportunity. And CFD is not restricted by the market direction. So you can use in the bull market, you can also use in the bear market cycle. So another thing is just now we talk about CFD is actually traded on margin. So it means that traders are able to use leverage to take on a larger position while using a smaller initial deposit. But do think that leverage is always a double-edged sword. You need to handle it carefully. Can amplify your return, also can amplify your loss. So we have one example. Let's say the value of this 10K share is 20,000. If you are doing normal stock, right, to purchase this share, you need to put a capital of 20,000. But with a CFD, with a margin requirement of 10%, instead of coming up with this full value, you only come up with 10% means 2,000. So you just need 2,000 to actually open the position. The leverage is actually 10 times, but do take note, leverage is always a double-edged sword. So we have some example. Let's say I have bought a stock at $2, then 10,000. My initial capital outlay for stock wise is 20,000. But if I'm using CFD, right, the margin is only 10%, 2,000. When the price go up to 2.1, so I subsequently close off this position. So actually from here, I can see that both I make a $1,000, I will exclude commission and financing charges for simple calculation. So the return on my equity, what I put in is based on 1,000 over 20,000 is 5%. But with CFD, it can go up to 50%. But do think note, sometimes when you are doing trading, it's not always the market price will go into your favor. Let's say instead of when I go long, but instead of the price going up from $2 to 2.1, but the price actually dropped to 1.9. So at this stage, right, actually incur a loss of $1,000. So you can see at this stage, right, actually, if I'm using equity, just stock, I'll have a 5% off. But if I'm using CFD, my loss can be amplified to 50%. So you can see actually CFD have the leverage to amplify your loss and return. And another thing is, if you are doing stock, right, if you do naked short selling, do think that you have to cover by end of the day. We have a lot of clients, right, recently in the bear market, they actually do short selling, but they do not know that actually for this T+2 transaction date +2 doesn't apply to stock side. You need to actually cover the short selling position by end of the day. If not, you have end up in a situation where SGX will subject you to penalty, and the penalty can be subjected to a few thousand a day. We recently have to appeal for a few clients regarding this, and it's not easy. We have to prepare report this and get client. So you have to think, if you are doing naked short selling, please cover by the end of the day. It's not by transaction +2. So with CFD, right, if you do CFD, you can hold the position, and subsequently you can actually gain this downside return of this 50%. So you can see that actually CFD allow you to it can amplify your loss and amplify your return, and also allow you to participate in the downside movement of the market. So do think that leverage is always a double-edged sword. So you need to handle it carefully. So a lot of people asking whether is it CFD just for trading. So we need to understand what is hedging. So I think there's a lot, maybe we do not go out that much, but some of us when we are going out, right, we actually carry umbrella along. So it's actually a kind of hedging strategy to hedge against uncertainty weather like raining weather, all this. So in and most of us also do buy insurance. So if you are buying insurance, right, it's actually when we are buying insurance, right, we actually hope nothing happened to us. You don't want to end up in a hospital or end up anywhere or get the accident, touch wood. So in this case, actually we are buying insurance. We do not know what will happen to us, but we are actually providing a hedging against any negative events. This one, let's say if something really happened to you, there will be some sort of support that will help you to overcome the negative event. So in investment, right, actually for fund manager or some of these trader, right, they also practice hedging against any adverse price movement. So where they will use a different product like options, CFD or future, but to do a hedging against any adverse price movement. So let's say you have a long position in stock. So what you can do is actually you can use CFD as a hedge to reduce the financial impact. So hedging is today we won't be talking so much about hedging, because if we want to talk about hedging, there will be a full topic on this. There will be like partial hedging, a full hedge. You need to understand all this before we can proceed. So I'll be continue. Give me a moment. Okay, I'll go into the next slide. So we'll be actually talking about our last product, FX CFD. I think everyone has heard about zero trading commission. So this is one of the new launch product we launched last year around August, July period. So we'll be talking about why we want to trade in FX CFD. So actually FX market is actually one of the world's largest and most liquid financial market with an average trading volume exceeding 5 trillion. If we are compared to a normal equity market that we do normally, right, it's only just around 200 billion. So you can see that actually FX market is around 20 to 25 times bigger than our normal equity market. And also in this market, right, it ranges from retail trader to financial institute to bank, hedge fund, even to the central bank government. So you can see FX market is actually with a big market, right, there's a lot of liquidity inside the market. So before we talk about FX market, we want to understand this more about Forex. So one of the things that we need to understand in FX market is 1 pips is actually a standardized unit referred to the fourth or second decimal place of all currency pair. So for currency pair like pound/USD CFD, right, we are actually offer up to 5 decimal place, but 1 pip actually refer to the fourth decimal place. So this thing we offer up to 5 decimal. Then for currency pair against Japanese yen, USD against Japanese yen, right, offer up to 3 decimal place, and 1 pip actually refers to the second decimal place. So when talking about 1 pips, right, on a 100K contract size is actually 10 USD. If on a 1 pips on a 10K contract size is actually 1 USD. And why we talk about this is because for our product is actually 10K contract size. It's actually more manageable for retail client to do trading. In FX market, right, actually the market do not sleep. It's actually 24 hours, 5 days. Later we'll talk about this. Another thing is that we need to understand base currency and term currency. Let's say we go to money exchanger, right? Let's say I'm going to Malaysia. So when I go to money exchanger, I always see there's a bid and ask price also. So we need to understand what is the base currency and what is the term currency. The most easiest way to actually understand base currency is always on the left hand side. Then term currency always be on the right hand side. So when we enter the buy or sell trade, right, we refer to the base, and opposite transaction will take place in the term currency. Let's say we are buying pound/USD, so we are buying pound, selling USD dollar. Let's say another thing is if we are going JB, so we'll be buying ringgit, selling Sing dollars. This is how you understand. So to how understand, let's say the code is actually pound to USD is 1.3. So it means that 1 pound can be exchanged to 1.3 USD. If it's 1.45, means that 1 pound can be exchanged to 1.45. So similarly, when you go to Malaysia, let's say the exchange rate is 3. So it means that 1 Sing dollar can be exchanged for 3 ringgit. So based on this, right, all this profit and loss will be reflected in the term currency on the right hand side. So many people ask, why do we want to trade Forex? Because Forex is actually traded 24 hours, 5 days a week. So at any point of time, right, you can actually open a position and close a position. If you are trading in equity market, let's say I trade in DBS, then I bought the share today, but something at the market close, there's some corporate action or corporate announcement that will affect the share price significantly. And during this stage, I cannot actually close my position or take profit until the next day, or cut loss until the next day, then I can do something about it. So you can see that in equity market, right, you can't close off position at any point of time, unlike this FX market where you can close off position. Another thing is that we talk about FX market. For this product, is actually the first product with zero commission that we launched. So you can see that zero commission is I would say that is the future trend, and we'll be slowly moving towards that. So you can see that this is the first product, is the first stepping stone for our Phillip Security. Next thing, Forex trading is also bi-direction. You can go both long and short. And also we talk about high liquidity, because Forex market is around 20 to 25 times bigger than the normal equity market. So there'll be a lot of liquidity inside our market. Also, we talk about CFD, FX CFD, right, come with leverages. And also there's free platform you can use Buoyant 2.0 to do trading. One thing is about for FX is another thing is that because of the high liquidity, right, no one can actually corner market for a long period of time. Like if you are doing equity market, sometimes you can see that actually the price will actually trapped within maybe $1 and 1.2. You can see that actually there are a lot trade done if you have market depth, right. You can see there are a lot orders at $1 and also a lot orders at 1.2. So subsequently, you can see all the trade maybe trapped in this 1.1 region. So sometimes it's that their fund house or fund manager, right, they are putting all this order, right, they are slowly doing accumulation or slowly offloading their share during this period, where they can corner market to do accumulation or offloading. But in the FX market, due to high liquidity, right, no one can actually corner this market for a long period of time. So why we want to offer, many people ask why we want to offer FX CFD, because you understand that Phillip Security has a brother, so Phillip Future will also offer FX. So we want to actually be a one-stop shop solution for our client, where you can do stock, you can do CFD, you can do ETF, you can do unit trust, you can do everything on a single platform. Make it easier for our client with one single login. So what we offer, we always, when we are talking about FX CFD, we'll be talking about spreads. So this one is the first 4 pair that we actually launched: Euro/Sing, USD/Japanese yen, Pound/USD, and USD/SEK. So this is the Phillip Security rate. You can see that actually our spread is actually quite competitive, or one of the better as compared to our competitor, especially in the USD/Sing dollars, where it's one of the most popular pair, because we are living in Singapore, so a lot of things that will be focused on Singapore, like trading against USD dollars. So what we offer is that all the margin and P&L will be actually calculated in terms of the term currency. Just now we talk about base currency on the left-hand side, term currency on the right-hand side. And all these swap points, I also do think note that if you are holding FX position overnight, right, due to the interest rate different, because different currency have different interest rate, you may need to you can actually gain in terms of swap point, or you can lose swap. You have to pay for this swap point. So if you are holding position overnight, there will be a swap point adjustment. And also there's a 5% margin requirement for our foreign C pair, and currently we have around 30 pairs for trading. So what we offer is actually currently is available from Buoyant 2.0 and Buoyant 2 Mobile. And these are the orders type, and all our charting will be based on mid price. Mid price, let's say the currency pair is actually $1 and 1.1. So based on mid price will be 1.05. So many people ask, how do I open a CFD account? So in order to trade CFD, right, you actually need to pass your CKA in order to be eligible to trade your CFD. In case you fail this, right, then you have to go to this ABS website to understand more about CFD, get the certificate. Once you get the certificate, you can send to us. Also for clients, right, you need to understand the risk fact sheet to trade in CFD, because for CFD is a leverage product, so you need to understand the risk of this product. So to open an account is very easy. If you have Buoyant 2.0, you can just use the mobile app to log in with My Info. You can open an account with around 5 minutes time. Then there's also some promotion for people who open CFD recently, like for example, account opening promotion. So this promotion will start from 1st April until 30th of June. So you'll receive 5 free trade when you fund your account. So for more information, you can actually visit the Phillip CFD website. Then for frequent trader, right, who have actually do frequent trading in CFD, right, they'll actually enjoy some CFD trading rebate also. So you can find out more about this promotion also. Then also, if you are trading CFD and if you refer a friend to trade with us, right, you can also get CFD trading credit when you refer a friend. So for more information, you can visit our Phillip CFD website to find out more about this promotion. So this is a disclaimer. So maybe before I start, so we'll go into using a Poems platform first. So this is the Poems platform. I think many of you have logged in. So to see where is CFD, where to do the CKA and CKR. So over here, you go to account management under stock. Then over here, you can see the CKA and CKR over here. So you need to pass this CKA or CKR. In case you fail this, right, then you need to go to the ABS SIP website. So there's this portal when you need to take up the quiz for this contract for difference in order to be eligible to trade CFD. Then if you have CFD and subsequently you want to do an account opening, you can go to online account opening. Okay, for this account already done, you need to come here to actually open the account online. It's quite easy and fast. Then subsequently when you are eligible to trade, they'll tell you your account is actually activated for CFD trading. So we go to LP1 where you look out for let's say you talk about CFD. So over here, the first step we can come to is actually indices where you want to trade. Let's say just now I mentioned that Hong Kong index is actually, or is Hang Seng index is actually one of the popular for trading. Let's take a look at this chart. So you can see that actually Hang Seng index, right, if you look in terms of 5 minutes, right, I'll say that 5 minutes is actually quite popular. So you can see actually for price movement, even with Hang Seng index, there's quite a lot of price movements. That's why Hang Seng index is also one of the most popular market for, especially for Singaporean, because during daytime you can do trading. You don't want to, some of us is that at night we want to have our own free time, we want to do trading at night. So Hang Seng index is one of the market that have quite a lot movement where people do trading. And some of the indicator I always use will be like, give me a moment. MACD and simple RSI. So I'll be also having another webinar in I can't remember the exact date, in a few weeks time, about more about this MACD and RSI, how to use all these indicator to do trading. Today we won't be covering, we'll just be sharing about this. So you can look at the 5-day chart, you can see trading opportunities in this Hang Seng index. So you can see actually there's quite a lot of price movement. So actually they form a triple top, then subsequent actually reversal. So you can see for Hang Seng index, there's quite a lot of trading opportunity if you are really doing into trading. Then next we'll be talking about if you are trading into individual stock, then look for Singapore or different market. And we talk about FX CFD. So for FX CFD, right, there's different view. Can be this line view, or there's also a box view where you can see all this trading different currency pair that we offer. Then most of us, when we are doing trading, right, we also want to have some knowledge to what is happening to this share or account market, right? What we can do, we can come over here to news and research. Over here, you can see all the different report by our analysts. Also, there's another website where you can make use of this. It's called Stock BNB. So everyone know Airbnb, especially if you go overseas to travel. So actually Phillip research team, right, actually come out with this website called Stock BNB. So where they can find out information about trading idea and investment idea. So let's say I'm interested what is happening in REITs market. I just come over here. I can read up the latest reports by our analysts. So they'll share what is happening in the overall market. And I can also look out for what should I consider entering or exit. Then some of us they are not interested in investment. We want to do trading ideas. So what we can come over here, below here, there's a technical pulse. So you can see technical calls by our TA analyst. So let's say he have a technical pulse on this ascendant risk. So he'll share what is a possible entry, stop loss, and take profit position. You share why he actually analyzed this, what is happening to this stock. So you can look out for trading ideas under the technical pulse over here. Then some people are also interested to read up more about. Give me a moment. So more about education, right? There's another under our PhillipCapital CFD website. We also have education portion. So our education portion will contain all the upcoming webinar that we have. For example, today will be the short selling. Upcoming, I'll be covering how to use Points 2.0 to do trading. When for 23rd of April, we'll be sharing more about this TA session. Then if you are doing into fundamental, I'll also be sharing how to do actually fundamental health checkup of a company, whether is it healthy, how to screen for stock with strong fundamental. Also, if you want to understand more about Forex CFD, we have this seminar on the 2nd of May. So over here, you can find out all education. In case video, you can also find out over here what is happening in the market. Yeah, any TA course, you can also look over here. So all these courses, right, you can find over here. Then there's also a blog where we cover some education article like why we want to trade gold, how to trade gold and silver, what is happening or what is coronavirus. Hang Seng is Hong Kong losing their shine, so you can read up articles to enhance your knowledge, especially during this period of time. Most of us are at home, you can actually improve on your financial knowledge, whether is it for trading or whether is it for investment. So I'm going back to a slide. Okay, let me answer. I think there's quite a lot of questions. We'll go into the Q&A portion. We'll answer one by one. Okay. I think just now, let me see. So just now someone asked how example of profit and loss can be amplified by via CFD. So I'll go back to this slide. Just now we show this example. Give me a moment. Let's say we talk about this stock that has 10% margin. You can see that actually they can actually amplify your loss or returns. Let's say if you are only putting using ROE, right? So you can see actually ROE, right? They amplify your because of the 10% leverage can amplify your ROE return by 50%. They can also amplify your loss by 50%. So do take note, CFD is actually a double-edged sword. You need to handle it carefully. So I'll go, let me answer this. Can you show us how to, in the app, how to do short selling? And okay, short selling, give me. Let me exit the slide. So let me go back to a points platform. So when you are searching, let's say we talk about some stock first. Let's say StarHub. Give me a moment. So you can see that there's 3 different StarHub. First one is the EQ. Let me open up. Okay, sorry. Sorry for I think because I'm currently using a bit affected by this StarHub network due to the incident. So my network is a bit slow. I'm running on mobile network now. So it might be loading a bit slower. So you can see, okay, maybe I'll just show you over here. So you can see that there's different. EQ stand for equity. Then we talk about CFD, right? It's actually, you just see CFD alone. If you are doing DMA, where you can participate in the price pre-opening and post-closing, right, then we're looking in DMA. Let me open up. So when I'm trading, let's say I'm trading StarHub DMA. So what I need to do. So over here, you can tell me what is the bid and ask price. Let's say I want to buy. I think that StarHub is going up. So what I need to do is I just key in what is the quantity I want. Let's say I want to purchase 10,000 shares of this startup. So one at the price of 1.42, then they'll tell you what is the contract value. Because for startup, different share will have different margin requirement ratio. Based on this 20%, right, the margin requirement ratio for this startup is actually need to open this position, you need 2,840. Then they also show you the long and short financing charges based on per annum. So you can enter a position. Let's say I enter this position at 1.42. Then in case the price, I want to put a stop loss, so I can use this stop loss order. Let's say if the price actually I've entered a position at 1.42, I want to put stop loss. Let's say if the price drop below 1.35, then I will say that below 1.35 actually can drop down to the next support level, maybe around 1.2. So what I'll need to do, I'll key in this stop loss with a sell order. So if the price actually come to this and this is the trigger where it drop to 1.35. So in case it come to 1.35, first of all, this will be triggered. Then the actual order will go inside to actually help me to cut loss. Then some people, right, when they are doing trading, right, they actually have already know what their take profit and stop loss level. So what I can do is actually OCO orders. So let's say I enter the position buy transaction at 1.342 as the same. So I think that the price can go up to 1.5 where I will take my profit. However, sometimes I also need to put a stop loss to actually protect in case the price drop below 1.35 can drop to around 1.2. So I need to put a stop loss also. So this order is actually consists of a take profit and a stop loss. So if let's say the price level go to 1.5, this stop loss will be cancelled because it's one cancel the other order. So if the price actually goes down, right, so stop loss will trigger first, then my take profit will being cancelled. So this is one order go cancel the other order. Let me see. Okay, I'll go back to the question. Okay. Okay, someone asked if you are doing about stock CFD and how do you do a DMA CFD? So it's actually same. You just need to search for a counter DMA. Give me a moment. Then if you want to do DMA, right, you need to opt in over here, DMA under account management, CFD, DMA opt in order to trade in the DMA market. Okay. So I'm a Phillip client to trade CFD. Do I need to submit any application form? Yes, you need to actually log into your account under CFD. Then you do an online account opening where you can, as I mentioned over here, you can see over here, account management, CFD, online account opening form. You can do it online. What are the counterparty risks with when we are dealing with Poem CFD? So for counterparty risk is that I would say that because we are Phillip Security, we are here staying for a long period. So when you are doing CFD, you need to understand who is your counterparty. So I would say that we have been here for a long period of time. So it will depend whether you trust us or not. Because I would say that Phillip Security is one of, you can find us anywhere in the branches also. Okay, for time frame for doing shorting, right? If you are doing naked short, as I mentioned just now, you must cover by the end of the day. If not, if you don't cover, you'll be subjected to SGX penalty, can be a few thousand a few day. So if you are doing so-called short selling with CFD, right? Actually, you do not need to cover within 1 day. You can actually hold on the position as long as you can maintain the initial the maintenance margin. So you can trade, maybe I can trade short for 2 weeks or 3 weeks. It depends on your situation. So someone asked what is naked short selling? Means that let's say I do naked short selling, means that I do not have this position. I short sell this position in the market, then I have to actually cover by the end of the day. Okay. So someone asked what is cover by end of the day means that, let's say I short sell recently, we talk about SIA. There's some information about this SIA. So let's say I short sell at $6 and then the price actually dropped to 5.8. I will need to cover this position. Buyback means I short sell 1,000 quantity of this SIA. I need to buy back 1,000 of this SIA by the end of the day before the market close. Then for CFD, right, you can actually remain the position close as long as you can maintain a margin. Okay, given the current situation, what is the best cycle of opportunity? I would say that in terms of opportunity wise, right, you can look in terms of we can just want to talk about business cycle. I would say that one thing is that when you're looking for this, one of them will be actually gold trading. In terms of gold, you can see that actually gold has been there's quite a lot of movement in the gold. So you can see that price is moving up or down. So I would say that gold is one opportunity to trade. Other product will be actually indices, like just now we talk about Hang Seng Index, or I'll because for me at night I don't want to do anything with trading, so I'll be focusing on market that during the daytime I can look into. So one of them will be actually Hang Seng Index, or what we know as over here is Hong Kong Index. So everyone will have different product. So you must see what product you want to trade and what is suitable for you. So for just as I mentioned, for if you do short in the EQ, you have to cover the position by the end of the day. Then for if you are talking about daily, the trading commission for CFD, you can visit our CFD website. Under the products and the price, you can find out more information about all these individual wise. Like for example, you are trading Hong Kong, what is the commission, all this, you can see it over here. So you can find out over here with your own website. So for someone talk about margin ratio, because for margin ratio, right, because for all this margin ratio, right, actually depend on the grading of the shares. Let's say if you are talking about blue chips, right, generally for like shares like DBS or this, if it's blue chip, right, the margin requirement is actually 10%. But if it's more risky stock, right, we actually require a higher margin. Let's say if you talk about certain share, maybe you put maybe 70% or even 80%. So it depends on the grading of this share and how stable is it, whether is it a blue chip or this. I think this one answer. So just now there'll be talk about CFD. So do take note for CFD, right? Because we talk about long and short financing charges. So there'll be a long and short financing charges, and also depend on the grading of the share. The long and short financing charges can vary. So before you open the position, right, you can actually check the long and short financing charges. Let's say we go back to this StarHub again. So you can see if I long StarHub, what is the financing charges? If I short StarHub, what is the financing charges? So it's before you open position, you can see all these charges reflected over there. Okay, for CFD, right, we do not have so-called the T+2 is unlike stock. So you can, as long as you can maintain a maintenance margin, right, you can actually hold on the position longer than expected. So there's no, I would say that there's no holding period. The holding period, I would say that it's not focusing on the holding period. It'll be focusing on what is your target price and what is your stop loss. So you have to manage when you're trading, right, you need to understand what is your stop loss and trading, take profit position before you enter a trade. I think some of this. Okay, just now someone asked another question. What is the difference between Forex futures and CFD? I would say that both products are quite similar, but one of FX, right? Because for most clients, we just mentioned that for PhillipCapital, I want to be a one-stop shop solution for our client, where they can do equity trading, they can do CFD, can do unit trust, they can do ETF on one single platform. That's why we actually offer Forex over here, because most clients have Phillip Security account, but they do not have Phillip Future. And if you want to have two different accounts, you have to remember two different login, two different passwords. So we are making it easier for our client. Wow, there's quite a lot of questions coming in. So someone asked, are you able to do short US indices like S&P 500 with poems? Okay, so I'll go to the CFD under indices. Okay, you can see that for US, right, US S&P 500, you can see there's the USP 500. You are interested in trading Dow Jones, will be actually the Wall Street index. Then next that you can see over here is the US Tech 100 USD over here. So all this actually the names will be reflected. Then Hang Seng Index will be actually what we call the what over here we'll be calling the Hong Kong Index. You can see it over here. Okay, I think I explained this. So someone asked, do I enjoy or dividend, or I have to make payment for any right issue under when I'm trading under CFD? So let's say if you hold DBS and DBS is a long position in DBS, so in case DBS is paying out dividend, right, you will be entitled to get this dividend. However, if you are short DBS and DBS is paying out dividend, right, you have to be required to pay this dividend also. So it will be same as what you're holding shares. So if you hold long, you have to be entitled for dividend. If you short, you have to pay for the dividend. Okay, someone asked about how to check the link for. So I'll explain again. So you just Google for SIP ABS. Over here, there's an e-learning portal for investor. You just have to create an account, login. Then you are trading CFD, you can go inside contract for differences to fill up. Then in case some people are trading unit trust, then you have to fill up all this, get the certificate accordingly. So the certificate after that, they will be actually sent to your email. Then you can send to us or send to your trading representative. From there, we can actually activate your account. Okay, someone asked whether short selling option will be available for US market. This one we do not have short selling. The only way you can do short selling for US market will be through CFD. Then is the CK and CAR for the stock and CFD and future CFDs. All these are different because each different product will have different requirements. So you need to see when you're doing the CK and CKR, they'll tell you which are the product that you actually have the sufficient knowledge to pass and which one you don't have. Then you have to go to all these websites to take the quiz accordingly. Then someone was asked what is the difference between CFD and DLC. DLC is, as the name mentioned, daily leverage certificate. So DLC is only for daily trading. It's actually not meant for to hold a position overnight, unlike CFD where you can hold a position for a few days or up to a few weeks if you're trading a long-term swing trading or position trading. So depend on your trading strategy, then you have to see what is put up. Also CFD is, I would say that it's actually correlated to the price more because we mirror the market liquidity. Let's say you see outside DBS is trading at 24, for CFD will be trading at 24. So we mirror market liquidity. Then what happened to I think this is the same question. If CFD short CFD position and company have corporate action, that will depend whether they are able to cater for the right issue and what happened. Then in case we cannot, then we actually ask the client to actually close off the position within a certain period of time. Because sometimes different corporate action will have different situations. So we depend on this corporate action, then we'll give information to clients who are holding this stock what action they need to take. So just same question about SIP. So I think I answered it. Maybe there's quite a lot of questions. Maybe I'll choose those position that is more critical. Someone asked what is the capital required to start a CFD account. There's so-called no capital to start a CFD account. What you want to focus is to open the position, how much funds you need to open and what is the quantity and price. I think this someone asked the same question, how long you can hold CFD. There's no time limit as long you can maintain the margin. I think stop loss I said. Just now I already show how to set stop loss. Let me see. So for CFD trading limit, right, you need to actually deposit the money into your account before you do trading. Maybe I'll share about how you can fund your account. So actually, there's one method that I can use to fund your CFD account. So you go to account management under deposit funds, then there's a e-nets payment. So okay, this one is a testing account, so there's a lot. So let's say my CFD account is this. So using e-nets, right, I can actually fund my account. Let's say I want to fund account 2,000. Subsequently, I proceed to do e-nets, then key in my account details, then they'll help me to do funding. So there's a difference. So for stock, right, if you do stock for deposit using e-nets, right, the fund will be credited by the next working days. But for CFD, right, for business hour, the fund will be credited within the same day, but it will take a few hours for us to do the crediting. If it's after business hour, then the fund will be credited by the next working days. Okay. Other than the funding account, you can also fund your account through EPS. You can fund by bill payment to your stock account, and from there subsequently submit a withdrawal to a CFD. So how to submit withdrawal to CFD? You go to stock online forms. Then over here you can do a transfer. Let's say I want to withdraw 1,000 to my CFD. I just have to choose my CFD account. Then I just key in for CFD trading. Then just key in the password and submit. Then I can transfer my funds from stock to CFD. Someone asked what is the difference between future trading and CFD. I would say the mechanism behind is leverage and bidirectional is quite similar. Someone asked what is the advantage of buoyant versus Vickers. Wow, this is quite an interesting question. Okay, for us, buoyant, right, we have been here in the stockbroking firm for a long period of time, and if you like our platform, you enjoy the trading with us, you can use this platform. Also, I think that another thing is that I think recently, right, we have a new account called Phillip Cash Plus account. Actually, with this account, right, actually you can enjoy much lower brokerage. So what they base on is actually this brokerage rate is actually based on the previous day and total asset value in your account. Let's say you have 20K of stock and 20K of this cash. So actually you fall into the premier tier. So you can see actually for this account, right, the commission based on this, right, is actually much lower as compared to other account type. This is the account that we launched in February, and there are quite a lot of clients signing up for this account because to enjoy this low brokerage cost. So you can go to this website to find out more about this. Okay, let me see. So someone asked, can we buy US stock with CFD? Yes. For CFD, we offer a wide range of market. So give me a moment. So just now, what are the market we offer? You can come to CFD. Go to Phillip CFD website under product CFD. Then you can see what are the different market that we offer: Australia, China, Hong Kong, Japan, Malaysia, Singapore, UK, and US. So you can check over here. And if you are trading US stock with CFD, yes, we follow the US standard trading hours. So when you are trading in CFD, you need to transfer your funds from your stock side to the CFD. Just now, someone asked, what is if you are placing a trade, what is the so-called margin requirement. Let's say you just have to go to let's go back to here. I want to trade in certain market. Give me a moment, it's loading. Sorry, because I'm using mobile because of startup issue. So the loading might take a bit longer than expected. Right. Okay. Let's say I want to trade Wall Street Index, or known as Dow Jones. So I just key in one contract. They'll tell me what is the contract value based on the margin requirement ratio. They tell me what is the margin I require to trade this stock indices. Then what is the long and short financing charges. So before you place a trade, you can see all the margin requirement ratio. What is the long and short financing charges over here. Then you just key in the quantity and amount, then trade accordingly. Okay, just now, another question I think many people are asking is what is CFD and CFD DMA. So if you are trading CFD is actually available for all the different market we talked about just now. But for DMA, it's actually just specifically for Singapore market. Because for CFD, right, you cannot do in the pre-opening before 9 a.m. or post-closing after 5 p.m. But for DMA, you can participate in the pre-opening and post-closing. So DMA is the direct market access. Let me see what other question. Someone asked if I do not have account with Phillips, how do I start? You can just go to www.poems. Then you can over here you can click open an account. Then you can select what is the account type. So just I mentioned there's the most popular account now is actually the Cash Plus account, where you enjoy much lower trading brokerage. So this is a account that most people are opening low trading costs. If you want to link to your CDP, then you open a cash management account. That's our normal standard account. So you can see over here. Okay, let me see what are the main question again. I think I just now share about CFD and DMA, so I think quite a lot of people ask about this. Yeah, naked short selling refer to equity EQ. So naked short selling you need to cover by end of the day. Please take note, because we have some client who got into the SJAC penalty of a few $1,000s. It's really quite painful for them. We don't want any client to actually encounter this. Is not easy because we have to get so-called try to get SJAC waiver, but sometimes it might not waive. So do take note, if you do naked short selling, you need to cover by the end of the day for equity. Because okay, so when we talk about maintaining margin, right, because the price fluctuation, so if let's say if the price actually drop below, right, then you actually have to do some top up to maintain this margin, depending on this maintenance margin. Okay, let's see. Yes, someone talk about fee to hold over a position overnight. Just now you can see that what is the long position financing charges and short financing charges. So that is based on per annum. You just divide by the number 365 for 1 day. Yeah, financing charges will actually affect your profit margin, because let's say if I do a trade, I get maybe a profit of $100. If the financing charges is $3, so actually based on calculation all this, my profit will be only 97. So how do I close a short CFD function? So if you short, then you have to buy back. If you do a long position, then subsequently you can close the position by sell. Naked short selling is only available for SGX market. If you have a Phillip future account, if you want to open I'm not sure whether you have Someone asked if I have a Phillip Future account, do I still need to fill up a CKA form? You have to check when you open a Phillip account, all these CKA will be actually tied down together. How do you short or buy an indices? So just now we talked about this. You can go to LP1 under CFD, then under indices you can find out more information. Okay, I think there's quite a lot of question. In case you need more query, in case I can't answer all these questions, right, you can drop us an email. So where to contact us first, I drop. So you go to contact us, www.phillipcfd.com. You can find contact us. Because there's quite a lot of questions I might not be able to answer. Over here, you can drop us a message, so you can, if what is a question and inquiry, right, you can drop us, or you can give us a call tomorrow morning, where we can answer all your call accordingly. Okay, let me see, select 5 last questions before we end off this webinar. Let me see what is the question that we do. Is there any interesting question or critical question? Okay, someone asked quite another question. What will happen if we short a counter and the counter is suspended? Like for example, high flux. And in this case, right, then you will be actually, sometimes you'll be actually stuck with this position. Then you have to actually find someone to actually close off this position. Okay, how do we do FX CFD? Just now I share already. You go to CFD under go to LP1, CFD, then FX you can see over here. Let me see any other. Okay, someone asked, is there any good resource book or webinar about shorting or all this for the purpose of hedging? Currently, I do not. We'll be actually coming out with webinar regarding about hedging and also more details about this shorting, because just now is only the basics. So we'll be coming out for all this webinar, right? What you can do is that you can come over, look out for any. Give me a moment. I'll close all this first. Look out for our upcoming webinar over here and under Phillip CFD website. Education, all these webinars, right? You can look out for all these upcoming webinars where we'll share more information about this. Then I'll answer last 2 questions. In case I can't cover, I think you can drop us email or give us a call tomorrow. Let me see, got any? Okay, maybe someone asked about what is the market outlook for next 3 months. I think because when we are doing trading, we need to understand what is the market outlook. For me, I would say that for the market outlook for next 3 months, right, will depend actually mainly on what is happening to this COVID-19. Because I think this COVID-19 is unlike other situation that they face. This one is not easy to control. And depend on this one, I think the market, the overall, right, we might be still in the lockdown position. We will not be able to do travel, all this. So especially for tourism industry will be mostly affected by this situation. So the market outlook for this next 3 months, I would say that we might stay around here. In case the coronavirus escalate to get worsened, the market might drop further. Okay, let me answer the last question. Let me see any. Okay, let me see any other interesting question, because there's quite a lot of questions I can't answer all. Let's see. Any last question? Let me choose the last question. Okay, financing initial. Let me see what is the last. Okay, maybe I think quite a lot of questions actually answer before. I think what we'll share, someone asked want to ask about this S&P 500, the 200 moving average. So I'll go back to the same slide again. So this so you can see during this 2010 cycle, when they start to go into the bull market, right? You can see that this 200 moving average has been supporting this S&P 500 on the weekly basis chart. You can see has been supporting this bull market. So in case you can see that during 2000 and 2008 recession, right? Actually, they also break down from this 200 moving average. They did have they kept what we call a dead cat rebound above this 200 average, and suddenly drop further down to the bear market. So what we'll be looking out for if whether this is it a dead cat rebound, will be closely look out for is actually this 200 moving average. If it continue to break down from this 200 moving average, there's a possibility that the market will drop further down. So 200 moving average is quite a critical support for this S&P 500. So you can see it has been supporting during the bull market. So in case if there's a dead cat rebound, you're something close below this 200 moving average, then market will continue to drop further down. So then some people asking how to join the Telegram group. This is the Telegram group. In case I can't answer all your questions here, you can ask me inside the Telegram group, or you can contact us at the Phillip CFD website. Then we can answer your question accordingly, because there's I see there's still over 100 questions inside, so we are unable to answer all of these questions. So you can come to join this channel. We can do discussion over here, or you can drop by at the Phillip CFD website. So we can drop your question over here. Contact us, drop a question, so we can answer your question accordingly, because there's too many questions, we might not be able to come. Then another thing is there are some promotion ongoing. Just now we share account opening promotion, frequent trader, and refer affairs. You can find out more detail about this promotion under over here. So all our affiliate details, right, you can actually find out over here. So okay, I have come towards the end of my seminar. Thanks for joining. In case you have any question, just feel free to leave your question in the Telegram group or in the Phillip CFD website, so we can answer them accordingly. Thank you for your precious time.